The budget is largely on expected lines, I would say. The government's thrust towards kick-starting the economy is very evident. The 9 pillars as defined by the Finance Minister are clearly in the areas where one expected action, which is rural, agriculture, health, education, financial reforms, generally tax reforms, etc., are all the ones that I think the country was clearly looking forward to.
Hi, Mr. Mittal. Good afternoon. This is Arnab here. We'll keep tossing questions. Welcome to our Network Exchange exclusive, and thanks for joining us. I know how usually reticent you are and have been after budgets. It's great to see you today. Now, we have got some experts. They're also going to throw a couple of questions from their perspective. Tell me, does this budget give you a sense that this government is sure enough about improving India's ease of doing business ratings? If you were to look at it from that perspective, would you be satisfied?
I would say yes. I mean, this is one area where the Prime Minister, the Finance Minister and the government have been talking about it. And I think through this budget, they have delivered some clear messages that India's business environment will keep on getting better under this government. In particular, I would say, I've been globe-trotting for the last few weeks. The retrospective tax keeps on coming back again and again. And I think a very clear, bold window has been granted to Vodafone, Cairn, Nokia and many others who can take this window now to settle and move on and shut this case once for all. So largely, I think it's towards the area of ease of doing business. The Finance Minister also mentioned certain amendments are being brought onto the Companies Act to ensure that the ease of doing business becomes a reality in this country.
Yeah, and also a one-time dispute resolution scheme for all retro tax cases. Sandeep, over to you.
That's right. Mr. Mittal, we've had this heated debate on the fiscal deficit and the fact that the government should have probably relaxed the target and given growth a chance. Are you disappointed that the government hasn't done that, or are you happy that they're sticking to the 3.5% red line? Would you have rather had the government relax the target, give a bigger investment push?
Well, you know, as an entrepreneur, I've always been more towards spending by the government, especially when things are going well in the country. The government should spend as much as it can in terms of kick-starting the economy. But I guess you hear the voice, or rather the same voices of economists over the entrepreneurs, and you have to stick to a fiscal responsibility rather than spending your way through growth. So I think a balance has been achieved. 3.5% should satisfy all the voices that were trying to caution the Finance Minister of not breaching the fiscal responsibility. And on the side of investment, I think the Finance Minister has been able to get some money on the table for a lot of new projects.
Okay, so a couple of questions also come to your way from some of our experts. I'll just put a small one. Though I don't agree with this view that if you necessarily give a little bit more disposable income, there'll be a positive impact on demand, that it'll happen, but that it'll have a reflection on growth is something that I'm not personally sure of. In your view, has Jaitley's third budget done enough to put more money in people's hands?
I think it's always, as you know, Arnab, it's a tough balance when India needs so much money towards the social areas. And I think one of the key highlights of this budget is, you know, ensuring that the agriculture stress is taken care of, ensuring that rural missions, MG, Narendra, many other programs get the money that they want. In fact, Narendra has got the highest outlay this year. All of this required money for the Finance Minister.
Mr. Mittal, broadly, before some experts here in our studio come in, was corporate India not expecting big ticket announcements? I mean, you know, would you expect the government to play safe? Was there really any expectation of big ticket announcements this time at a real level?
I think two areas. One, banking reforms, and some move has happened there. I've heard some experts speaking that 25,000 crores is not enough. I would say it's a good start, and I think the Finance Minister could possibly give more money for recapitalization of the banks. That was one area where a lot of noise was heard. And I think the other was in the area of infrastructure development, and infrastructure push has been given, and I think government is also committed to closing the last mile of hundreds of projects that are languishing out there, and that should relieve a lot of infrastructure players. So I would say, all in all, you can say corporate India could have expected a 1% tax rate to go down. I think that's been a surprise that despite the roadmap for exemptions have been put out in the budget, the drop of 1% which was expected this year has not happened. But I would say equally for new manufacturing, taking it straight to 25% by not seeking any exemptions or accelerated depreciation is a good step.
I think one area they could have done more is for startups. You know, the 100% exemption on tax of profits for 3 out of 5 years proposed for startups. I don't know, startups may take longer to actually generate profits. So I don't know how much of an incentive that particular one is. Questions for you, sir. Coming in, Sunil Alag, let's keep it brief. Who has questions here for, okay, we have Navika, we have Omkar Goswami. We'll take 3 together.
I'll take,
it's becoming a press conference.
No, it's like Swami just raised a question with you, Sunil, on bank rate and interest. That's to be done by RBI. I don't think that could have been done in the budget. That's just one point which was not necessary. But one very key thing which you raised right now is that I was going to ask you that earlier, is that the industry now has to come up, and you're already doing it, but they have to come up and play the role as well and not keep waiting for incentives to come from the government. So some thrust in domestic investment has to take place, which you're doing, but I don't see it happening with all. And how do we encourage everybody in India? Because demand is going to get generated, that should lead to it, but it's still, everyone in India waits. When is the incentives going to come? When my taxes will come down, that's when I'll invest. And maybe we need a change in that attitude amongst industrialists.
Okay,
and Sunil, between me and you, you know that there are large punters, and I call them punters, people who have been investing big, are currently caught in a bit of a jam. You know, they have got too much debt from the banks. Banks have stopped their lines of credit to them. Many of the projects where billions of dollars have been spent have not been closed towards the last mile, so they have not started to generate revenues. So I would say that if you take the top 50, 60 houses, 60, 70% of them are currently caught in a big debt issue with the banks, and with banks not willing to lend them any more money, because rightly so, because some of the projects have got stalled. So it's a chicken and egg problem. How do they close the projects? How do they start generating revenue to satisfy the banks, and then get more money to put out more projects?
Mr. Mittal, just to pick on a point that Arnab was also making just a short while ago on big ticket reforms and whether corporate India's expectations were muted, would you have liked this budget to have taken some more bold steps on the lines of privatization, maybe labor reforms, bring down government stakes strategically in a lot of other companies? Would you have liked to have seen some of that? Because politically this was the best time for the government to act in that direction.
Well, I would say labor reforms and all, we need to really look at the states now, and states are getting the cues from the central government to make business an easy way of moving for the companies and corporates. So we'll leave the labor reforms into the hands of states. On the divestment or disinvestment program, I think the government could have certainly been much more bolder than they have in this budget. The target should have been much bigger, but I think we should also be aware that last year the budgets, the target was not met. So maybe the finance minister is a little bit more cautious this year, but they have an opportunity to do a lot more there.
Well, I mean, if they meet those targets, it's going to be twice what they achieved this year if they meet the reduced targets. Navika.
Correct.
Mr. Mittal, the real question is, you've been talking about the banking sector and the problems therein, and how the line of credit has been frozen to several big companies, which is why I'm asking you, is the 25,000 recap something that's enough to kickstart that entire sector, that entire cycle of investment and credit offtake?
Well, I think that's why I said the experts have been saying 25,000 crores is far too little. But Navika, we must be conscious whether it's 25, 40 or 50,000 crores. This money is not going to go into the banks to again fund the distressed business houses. You know, very clearly banks are now getting very tight, very tough on recovering their monies. RBI has been prodding and pushing them to declare people, declare NPAs and declare willful defaulters. So situation out there will not be resolved by putting more money into the banks. Banks just need to be more healthy and capitalized for sure. But I think banks, the bankruptcy law, the bankruptcy law which is being introduced, I think that may just do the job that the banks may want to do.
Mr. Mittal, two questions coming your way. It's all right to say that we have a dispute resolution mechanism and Vodafone case will perhaps be finally done away with because the government is very categorically saying withdraw your cases, pay the liability and you're good to go. But as long as you do not put it into the statute, are you going to really see a resolution? That's question number one. And question number two is, at a time when demand is low, increasing cess, the agri cess, the infra cess is perhaps going to dent it even further, will it not?
I know, but as I mentioned, we have seen the finance minister putting a lot of money into his 9 pillars. I mean, where is he going to get the money from? Eventually, the successful corporates and people with higher incomes will have to pool in much more money than they have in the past, whether it is the surcharge on the 1 crore income tax going from 12 to 15%, or the half percent cess that is coming on the corporates. It is bound to happen. I mean, where do you bring the money in from?
Okay, so Mr. Mittal, ET now has a couple of more questions for you. But at this stage, I'm saying thank you to you for joining us from Times Now. Don't get up, because ET now has a couple of more questions for you. Mr. Mittal, nice talking to you. Okay.
Thanks, Arnab.
All right, Mr. Mittal, thank you very much for staying on with us. I know we were talking about disinvestment, and you said that it was not met last year, and which is perhaps why the target has been lowered. If you actually see disinvestment targets for the last 10 years, they've never been met. How optimistic are you that the government is now going to leverage the stakes that they actually have and sell them in the markets? They haven't done that when the markets were at a high. Do you expect them to do that when markets are, up 20% of their recent highs now?
Well, I'm a big believer of government divesting as much stakes as they can in most of their public sector units and make them very well professionally managed public companies. We have seen that successfully happening in all the developed countries of the world. And I think India, as it grows richer, as it gets better governed, as it comes into being a better and more developed society, I think my own view is most of these companies must be run as very successful public-run companies outside the control of the government. To that extent, the government has large pools of public sector assets. And in my own way, if I have to give one message for the finance minister and the government, is be bold and brave and do much, much larger disinvestments than they have been planned now or in the last few years.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.